Further referring to, my dear friends, continuation of value of supply. Rule number 37 capital A, which talks about valuation for lotteries. Very simple. Face value of the lottery ticket, which is MRP price. Eliminate GST, which is 28%. Compare that value with price notified in the official gazette by the state government. From that, eliminate the GST and compare the two values. Face value exclusive of GST, price notified in the official gazette exclusive of GST. Among that, whichever is higher is a place of is the value of supply. For lottery, who liable to pay GST? Recipient liable to pay GST. RCM applies. Got the clarity? Further referring here, in case of other than that, like a betting, horse racing, this and all casino, 100% of the bet is the value of supply. Even you take rule number 31 capital B, online money gaming, rule number 31 capital C, casino. What is the exact difference between rule number 31 capital B, rule number 31 capital C? Rule number 31 capital B, online money gaming, which includes any type of money gaming. It may be horse racing, it may be casino, but internet, with the help of internet. Rule number 31C, casino, which is physically playing, not using the internet. In both the cases, valuation as follows. What is the value of the bet? I brief it to you. If the player deposited into wallet for gaming purpose 20,000 is not played, deposit the amount to play. That amount itself is the value of supply. GST, the rate of 20% will apply. Sir, he cost the bet rupees 200 out of 20,000. GST is not 200, GST on 20,000, which may be inclusive basis first time. Sir, he cost the bet 200. He own, for example, own rupees 1,000 rupees owned. The winning price is recosting in the same bet. This recosting the amount in the same bet is not a supply. If he recost in another bet of the same platform, is a supply. Here, he cost the bet 200 rupees in the bet A. He won the money, 1,000 rupees. The 1,000 rupees is recosting. Where? In same bet means bet A. If he recost in bet B, will attract GST again as a fresh supply. There is a question in the examination of CF final and RTP question from rule number 31 capital B, online money gaming, which I will bring to your notice right now to work out. How horrible it is, you see. Means amount collecting left and right. Rule number 31 B. Yes. Exam problem it is. Reading here as follows. So much hanging. I think continuous operating purpose, sir. Maybe. Mhm. 1 minute, Raja. This my system is hanging. I think now only I'm referring this problem. Earlier not there. But anyhow. Yes. Now reading the question here from rule number 31, capital B. Mrs. Starbet Gaming Incorporation, an online money gaming platform based in Dubai, allows users to play various virtual gaming and betting activities through its portal accessible in India. In November 2025, Mr. Rakesh Sharma, an unregistered player located in India, deposited 18,000 rupees inclusive of GST into his Starbet master wallet. The following transactions were made by Rakesh during the same month. He played a virtual drag race using rupees 3,000 from the master wallet. As a result, 13,000 rupees was credited back to his wallet as winning. On another betting site run by Starbet called Star Arena 360, Mr. Rakesh placed a bet of rupees 13,000 face value exclusive of tax on an international football match. This bet was paid via the master wallet and he lost the bet. After these transactions, Rakesh requested to withdraw remaining balance to his bank account. You are required to compute the taxable value, total GST payable under the GST law for the above transaction by Starbet Gaming Incorporation. Though it may be in Dubai, they have to pay the GST in India as import of goods it is. No RCM, only FCM. That to supply of goods, supply liable to pay GST, having a representative in India. That's why they are asking Starbet Gaming in India, incorporation in India, how much liable to pay GST. Determine the net amount transferred by Rakesh from the master wallet to his bank account after all gaming and betting transactions. Applicable rate of GST how much? 28%. Now very simple, sir. valuation for our rule number 31 capital B. Look here. How much he deposits the value? 18,000. 18,000 itself inclusive of the GST is the bet value. He is not betted, he deposited. Therefore, here 28% divided by 128, you will get a GST. How much, Raja? Quickly, fast. Everyone should involved. 3,938 point, 35.5, 0.5 and above 1 rupee. We have a section itself, section 170. Get my point, sir? 170 says 50% above, round off to next 1 rupee. So now here somewhere I will take into account to present this. So okay, so is the GST amount is the amount of 18,000. Now tell me 18,000 minus GST 3938. Balance how much is there in the wallet? 14,600 062 is clear, sir? Then from this he taken how much value? 3,000 for bet. For bet 3,000 rupees gone, and he own how much? 13,000. So amount own how much? 13,000 came back to his account. Therefore, how much is there in the kitty? 24,062 is there. Thereafter, he costed another bet. Rakesh costed with the where he costed the bet, another bet. Star Arena 360, another bet is again supply. So will attract GST. Get my point, sir? Winning price won't attract GST. Winning price you are going to recost in the same bet from where you own, no GST. If you rebet in a different bet of the same platform, attract GST. How much? 13,000, which is exclusive of GST. So 13,000 into 28 divided by 100. How much GST? Extra. That means I'll pull here. So he cost the bet. He cost the bet. How much? 13,000. Amount gone. Then on the rupees, how much GST? 640. Amount gone towards GST. So for GST amount here, how much we got? 3938 plus 3640. Who has to pay? Supplier has to pay. With that, he lost the money. With the balance amount, how much is there? 24,062 minus 13,000 bet amount minus 3,640 is the GST amount. 7,422 will be returned back to that gentleman. He came with rupees 18,000. He is now going back with 7,422. He winner or loser? Loser. Never going to win. Get my point? Tempting to win, but they won't permit you to win forever. So, what is the GST amount liable to pay by supplier? Means here almost you got 3,938 plus 3,640. Total amount equal to 7,578. Is clear? Recheck the GST amount. Amount paid to wallet 7,422. Any difficulty? Any difficulty? The same thing I am presenting here. GST payable 7,578. How much? 7,578. Wallet, how much return back? 7422. 7422. You get my point, sir? Is the way in which valuation takes place. Not the betting amount. Deposit amount is the value of supply. In case of rule number 31, online money gaming, rule number 31C, rule number 31 capital B, online money gaming, rule number 31 capital C, the casino. The bet amount, the valid deposit amount is the value of supply. In the case of a lottery, face value exclude GST, price notified in the official gazette exclude of GST, amount whichever is higher, 31A. Thereafter, horse racing, thereafter the gambling, these and all, the value of the amount of bet, how much is going to cost a bet is the value of supply. Is clear, sir? If you convert into online, deposit amount is the value of supply, which is always inclusive of GST. Get my point, sir? No doubt. Hold the mic and ask me, brother. That just blink is coming? Is coming, yes. Go ahead. Not coming. Just check. Hold it. The second one. Coming. Now okay, speak.
Hello? Sir, 3,000 rupees he put on a bet, sir. 3,000 rupees he put on a bet. He won 13,000 rupees. On the 13,000 there is no GST, sir.
The inclusive thing. No. What, come again, please? 3,000 he cost the bet.
He cost the bet.
Out of his 18,000.
18,000 invested, sir, first.
That is taxable.
That is taxable. Then after that, he
won rupees 3,000. He cost the bet.
He cost the bet at 3,000. And with that 3,000 bet, he won 13,000 rupees.
13,000.
The winning amount.
Winning price is not attached GST. Why? Question mark. Good question. It is actionable claim. Is it? Actionable claim. For the sake of discussion, any amount you own, like a windfall gain, actionable claim. Subject to TDS and Income Tax Act, but no GST. Is only a payment. Only a payment. Get the point? Yeah. Now come back. Further, my dear friends. Rule number 32, sub rule number 2 now. 31C is over, 31A, 31B, 31C. Same, 31B is same as 31C for casino. Referring furthermore here, money exchange services. Authorized money exchanger from Reserve Bank of India, his supply of services in relation to money transaction. In spite of that, his money transaction supply of service includes, you are aware of that, section 2 subsection 1 or 2 of the CGST, service excludes money, but service definition includes one form of currency converted into another form of currency. Service includes. So money exchanger who operate under the guidelines of the Reserve Bank of India, under license of the Reserve Bank of India, such authorized money exchanger has only rule number 32, sub number 2, class A or class B. No other option. If money exchanger says, I want to pay the GST on the commission what I am earning, sorry, no option. Money exchanger, refer the valuation rule and I have the valuation. Rule number 32, sub number 2. In that class A, which says that 3 possibilities. Actual exchange rate compared with the Reserve Bank of India exchange rate at the time of transaction took place. The difference multiplied with the number of units of the foreign currency exchanged. That value is equal to value of taxable supply on which you pay the GST rate of 18%. Coming to option, second category, where there is no Reserve Bank of India reference rate in place. If so, in that case, actual exchange rate might be there because the transaction took place. that actual exchange rate multiplied with the number of units of the foreign currency, and the total value apply 1%, which is derived from rule number 32 sub number 2 class A, that gives you value of taxable service on which you apply at the rate of 18% GST. In the case of a cross currency, I have US dollars with me, I want UK pounds, I am in India. So money exchange are taking foreign currency, converting into Indian currencies, and equivalently foreign currency of other country. That means one form of currency, one form of foreign currency converting into another form of foreign country in India. In that case, money exchanges should be dealt with Reserve Bank of India. Therefore, two countries' foreign currencies convert into RBI reference rate. Among the two values, whichever value is the value lesser, lower value, choose that value on which you apply 1%. This should be recurred in the exam. Two foreign country currencies exchanging in India. US dollars for UK pound or UK pound for US dollars. Then two countries foreign currency convert into with respect to Reserve Bank of India reference rate. Among the two values, lesser value choose on which you apply 1%. That gives the value of taxable services on which you have to pay the GST. In the given case, among the two values, Indian rupees for 62 lakhs or 48, which is let's say 48 lakhs, on which apply 1% is the value of taxable supply. Now, if the GST is available, 18% GST on 48,000. RBI reference rate not available, 1% of the total value of exchange, taxable supply. If reference rate is available, compare with the exchange rate, among the difference only you have to multiply with the foreign currency. That gives you value of taxable supply on which you apply GST. If not, rule number 32, sub number 2, class A says, if you are not happy with this particular rule number 32, sub number 2, class A, you have option to choose rule number 32, sub number 2, class B is option. This option should be exercised anytime in between of the financial year, but once you exercise this option, you have no option to withdraw this option in the year in which you choosing this particular option. Today, 6th of August 2025, I chosen this scheme. In the year 25-26, I should be with that only. I want to come out the next year, 26, 27 only have to come out, not in between the financial year. It's clear. What is this option? Very simple option, like income tax slab rates. Here, only actual exchange rate speaks, no RBI reference rate. Number of units of the foreign currency multiply with the exchange rate, actual exchange rate. Total value how much? That value not exceed 1 lakh rupee. In that case, 1% of that 1 lakh up to 1 lakh is the value of supply. Meaning what? Exactly 1 lakh, sir. 1 lakh 1% of 1000. But if I have only 80 units, sir, how many? 80 US dollars per dollar 100 rupees, sir, is equal to how much, sir? 8,000. Get my point, sir? And 8,000 1%, 80 rupees. 80 rupees cannot be a value. Minimum is 250 rupees per transaction. Minimum how much? 250 per transaction. Sir, there is $10,000, sir. Oh, $10,000, sir. Very good. Very goodbye. How much you exchanged? Sir, 100 rupees per dollar, sir. 10,000 into 100 is equal to 10 lakh rupees. Correct? Am I right or not? $10,000 multiplied by 100 rupees is equal to per dollar how much? Total value how much? 10 lakhs. Up to 1 lakh, 1%, 1,000. From 1 lakh to 10 lakhs, 9 lakhs is there. On that 9 lakhs, 0.5%. 0.5% on 9 lakhs is equal to how much? 4,500. Up to 1 lakh, 1%, 1,000. Total is 5,500 is the value of supply. No, sir, I have the dollars with me, $15,000. Okay, $15,000 per actual change 100 rupees, sir. For example, 15 lakh rupees. Up to 10 lakh rupees, 5,500. Over and above that, how much is there? 5 lakhs. On 5 lakhs, 0.1%. Memory recall. 1%, 1 lakh. 0.5%, 1 lakh to 10 lakhs. 0.1% more than 10 lakhs. How much is there? 5 lakhs. On which 0.1% is equal to how much? 5 lakhs into 0.5% is on 0.1%. Why 0.5%? Who said it? More than 10 lakhs, 0.1%. 0.1% 5 lakhs equal to 500. Already 5,500 plus 500. 6,000 is the value. Such a value per transaction should not go beyond 60,000 rupees. Minimum 250 rupees per transaction, maximum 60,000 rupees per transaction. If it is exceeded rupees 60,000 per transaction, declared the value of supply only 60,000. If it is less than 250 rupees per transaction, declared the value is rupees 250 per transaction. Get my point, sir? It's called rule number 32, sub number 2, class B. Either class A option, class B option. That only. No other option for money exchanger to pay the GST after having the value. Is clear, sir? Now come back. Rule number 32, sub number 3, which talks about valuation in case of air travel agent, not operator. Air travel agent, not a train travel agent. Air car. Air travel agent. For him, he can pay on commission 18% GST. Commission now includes year-ending bonus. Why, sir? The air travel operator, instead of paying 100 rupees commission, paying 99 rupees. 1 rupee retaining and saying, hey agent, we will pay to you at the end of the year to retain the agent. So at the end of the year, that what is retention money releasing in the name of bonus? Nothing but what? A commission. If you have commission plus earning bonus, total is value of supply. Is clear, sir? On which 18%? That option is required. Go ahead. No, sir, I want to go with the valuation rule number 32, sub number 3, sir. Then for basic fare, which you are permitted to book the tickets for customers in a particular air travel. For example, SpiceJet air travel operator. To travel in SpiceJet, the customer booking the ticket through you. Your name is air travel agent. E-commerce operator. Through you booking the ticket. In that case, in the given case, the air travel agent is charging the commission. If not willing to pay GST and commission, what is the basic airfare which you permitted to book the ticket? Sir, rupees 10,000, sir. Domestic or international? Domestic, sir. Domestic means 5% of the basic airfare is equal to value of the supply. 10,000, 5% is equal to 500. Sir, international booking, sir, through my platform, sir. Oh, very good. 10% of the basic fare is equal to value of taxable supply. On that you pay the GST. You get my point? It's a tax planning. Either you go to commission basis, which includes earning bonus, on which pay the GST. Compare with GST payable under the valuation rule number 32, sub number 3, which is 5% or 10%, depends. Which is economical, you decide. One simple example in this regard, an examination problem is there. I am bringing to notice right now in the given case. Rule number 32, sub number 2, class B case. Rule number 32, sub number 3, sorry to say. I am not going with the rule number 32, sub number 2. Is clear? Money exchange clear, I'm asking, for which you don't want to waste valuable time. Can you recapitulate rule number 32, sub number 2, class A 1. Actual exchange rate compared with the Reserve Bank exchange rate. The difference multiplied with the foreign currency equal to value of supply. Second case, Reserve Bank of India reference rate not available. In that case, actual exchange rate multiplied with the number of units of foreign currency on the total apply 1% is equal to value of tax of supply. In the case of third case, cross currency, two different foreign currencies converted to Indian rupees by multiplying with respect to Reserve Bank of India reference rate on the among the two, which is the lower value, choose on which you apply 1%, that is equal to value of tax supply. In the case of rule number 32, sub number B, optional. If you choose it up to 1 lakh, 1%, minimum 250 is clear. If 1 lakh to 10 lakhs, 0.5%, more than 10 lakhs, 0.1%. It should not be go beyond 60,000 per transaction. If it goes beyond 60,000, declare 60,000 is the value of taxable supply. Is clear? That's all. Coming to rule number 32, sub number 3, where we have a tax planning approach is on the screen, is exactly examination problem of CA final. Reading as follows. Skyway Travel Solutions Private Limited, an air travel agent, needs to determine its GST liability for the quarter ended 30th June 2025 based on the following details. Basic airfare collected for domestic ticket booking 60 lakhs, basic airfare collected for international booking 95 lakhs, commission received from on airlines on domestic and international tickets 5,20,000, year-end bonus received in the same month 75,000. Compute the GST liability of Sky Travel Private Limited for the quarter ended 30th June 2025. Additionally, determine the GST liability would be reduced if the company opts for special provision for the GST payment. Rule number 32, sub number 3 of the CG rules, applicable rate of GST 18%. Now you ask in the examination, you have been asked in the examination to answer whether going for rule 32, sub number 3 is economical advice. You have to compute. Go for valuation rule. For domestic, what rate? 5%. For international, 10%. Is what? Taxable supply. How much? 5% on 60 lakhs. Oh, it's again hanging. Oh, sorry. Sorry, my dear friends. My system only troubling us. Don't worry, I have instruments with me, sufficient matter to handle this. Now came correctly, okay? So far I read without watching on the screen, but you understand, listen, no? Listen important now. That time I have to ask me, see, here 3 screens are there, 4 screens are there for me, in fact. One is iPad screen, one is a desktop screen, third one is a projector screen, fourth one is live screen. Then for me, live screen with my iPad only relevant. Other I am secondary only for me. Get my point, sir? This is a facilitating tools only. Otherwise, simply, sir, close all this. You going and take the class means I will take the class, I will make you understand. Much more better than this. But it's more strainful on me. To reduce my strainness only, I am using these particular instruments. So, in the given case, 60 lakhs domestic booking 5%, international booking 10%, 5% 60 lakhs 3 lakhs, 10% of 95 lakhs 9 lakh 50, total 12 lakh 50, on which is equal to GST 2 lakh 25,000. If I go the valuation rule, it is 2 lakh 25,000. If I go commission basis, what is the commission here? 5 lakh 20 plus 75,000 is equal to 5 lakh 95, on which 18% is equal to 1,07,100. Now, which is economical for me? Commission basis option is economical, not advisable to go with the valuation. Now the air travel agent asking, sir, can I have in the same financial year the two options? Yes. Mr. Commission Agent, for you, transaction to transaction you can have this. Meaning what? I have a transaction with the filling the passengers for Indigo. I have a transaction to fill the passengers SpiceJet. For SpiceJet, commission basis. For Indigo, I can go valuation. In the same method allowed. Get my point, sir? Is a uniqueness here, which is not so in the rule number 32, sub number 2, class B. The same thing. 2,25,000 here, 1,07,100. Which is best economically? Going with the commission basis economical. Is clear? Is advice. Is a tax planning. Advice meaning what? Tax planning. Now please come back. Rule number 32, sub number 4. Another mind-blowing point it is. It is with reference to life insurance. Life insurance two types, covering only risk plus saving. What do you mean by risk? Mr. X paying the premium every year 1 lakh rupee for a period of 20 years. He met with the accident, passed away. The compensation given by the LIC for life insurance corporation, for example, to the legal heads. Nothing has happened. X is alive even after expiry of 20 years of maturity period. Tata bye bye. Nothing saving, only risk cover. On the other hand, if Mr. X is paying risk plus saving per year 1,50,000, because risk plus saving premium is higher, where the insurance company is promised at the end of the maturity we will pay to you 80%. How much? 80%, which is saving your investment. In that case, 1,50,000 is paid first year. Entire 1,50,000 is a consideration. Question mark. It is not so. We have a consideration definition. Section 2, subsection 31. There, consideration does not include refundable deposit. Speak out. Consideration does not include refundable deposit. Here, what is the total premium calculated by insurance company? 1,50,000, for example. 80% refundable means repayable, which is not a consideration. Now it's self-pay. So 1,50,000 minus 80% of 1,50,000 is equal to how much? 90,000. 1,50,000 minus 80% how much? 80%. Huh? Yeah. Clear, Raja? 1,50,000 on which 80% how much? 1,20,000. So 1,50,000 rest refundable deposit 1,20,000. The balance retained how much? 30,000 is the only consideration, is the only valuation to pay the GST every year. There are the schemes, risk plus saving, where risk plus saving schemes, something will be returned. Exactly how much to be returned, we can't promise, but we return. It may be 90%, it may be 60%. Something will return. If insurance company not in a position to give the assurance for risk and saving insurance premiums, something will be mentioned to be given. Depends upon the investment how it going to trigger, because LIC nowadays allow to invest their premium amount even securities, secondary market. That's why the LIC company has been invested thousands of crores of rupees in the Adani group of companies. Now their target is long term. So after 20 years, after 25 years from now, we do not know. Something will be given. In that case, rule number 32, sub number 4 says that don't worry. Insurance company, you cut the premium? Yes, sir. How much credited? 1,50,000, sir. Okay. Is first year premium? Yes, sir. If it's a first year premium, 1,50,000 25% of that first year premium taxable supply. Means 75% not taxable. If it's a first year premium, second year, subsequent year premium, then 12.5% of the premium, 12.5% of the premium is value of taxable supply. Exactly 50% of 25%. Get my point. Second year, third year, fourth year premium and all, what rate are you going to pay? What is the value of taxable supply? 12.5% of the premium. Second year, 1,50,000 into 12.5% is equal to, like that you have to say, no, dynamic persons. 1,50,000 into 12.5%. Second year premium 18,750. Third year also same 18,750. Like that we go till the end. Get my point, sir? There is a premium, single annuity premium, means one time only will paid, will be covered for 15 years or 20 years, like that. In that case, that premium, 10% of the single annuity premium is equal to taxable supply. Generally, the parents used to invest huge amount, one time premium, in their beloved's name, son, daughter name, because daughter now is 5 years old. After 20 years means 25 years old. So that time she may be going to higher studies or going to for marriage, need more money. So in that case, for the saving purpose, they used to invest. In that case, if they paid 25 lakh rupees as the premium amount for 25 years, after 25 years, the amount going to be paid 50 lakhs, for example. In that case, what is the saving? Not specifically mentioned. 10%. 10% of 25 lakhs is equal to 2 lakh 50 is the value of taxable supply in the hands of insurance company. In the case where if it is a single annuity premium 10%. Now, sir, normal premium, risk plus saving, but not inform to policy holder how much saving. First year premium 25% equal to value of tax supply. Second year onwards 12.5% is the premium equal to value of tax supply. If it is clearly identified what is returnable, what is going to be paid back at the end of the maturity, in writing is given, this much I will pay, 70% I will pay, 80% I will pay, which is refundable deposit. That much will be reduced from the premium every year when you collect, and the balance only will be attract GST. Got the clarity? If I bring the problem, able to answer? Yes, problem required at this point of time from this. Yes. Yes, this problem can you read, my dear? The gentleman. The gentleman, you read, Amma. Bro, you read, Raja. What is your good name, bro? Sankesh. Your name? Jacket. Your name? Prince. Sanket, you please read, Raja. Question number 28. For me, please read. We will work out the answer together.
Evertrust Life Insurance Limited provides the following financial data for the month of July 2026. You are required to compute the GST payable by the company if it has opted to pay GST under Rule 32, subsection 4 of the CGST Rules 2017. Details of premiums collected. General policies. Total premiums collected 15,500 lakhs, out of which first year premium is 6,200 lakhs. Only risk cover policies. Premiums collected 650 lakhs. Variable insurance policies. Premiums collected 10,200 lakhs. 80% of this amount is collected allocated for investments on behalf of policyholders, and policyholders are provided with the separate breakup in premium receipts. Compute the GST liability if GST rates is 18%. For all transactions, the location of the supplier and the place of supply are within the same state.
Which indicates what? Intrastate. At that level, if you charge IGST, answer totally goes wrong. Be careful, my dear. அது ரொம்ப பார்க்குறாங்க. Because the revenue sharing is based on that only. Enter GST what for? GST is a dual tax structure, revenue sharing between the center and state. If that fundamental foundation stone you are going to hit it, then we won't get good marks. Step mark is not appropriate. Full marks we want. Now look here. This life insurance offering general insurance policies, premium how much? 15 lakh? 15,500 lakhs. Out of which first year premium how much? Now here are they inform anything? No. Therefore first year premium how much? Taxable supply equal to 25% no Raja of 6,200 lakhs is equal to how much? Taxable 6,200 first year premium out of is a premium, no? Total premium collected 15,500, sir. It has two. One is first year premium 6,200 lakhs. Other one is balance 15,500. 15,500 minus 6,200 is equal to how much? 9,300. Correct? Now on 6,200, 12.5%. 1,162.5 is taxable supply. Then the second 9,300 lakhs, second year premium only, na? Or subsequent year premium. In that case, what rate percentage is it? 25% for the first year premium. That much tell me first. 1,950 is clear. 1,550. 1,550. Correct. Now 9,600 is balance amount. Second year subsequent premium. What percentage is it? 12.5% I want. How much comes? 1,162.5 lakhs. Is clear, sir? With that general premium. Only risk coverage. How much? That entire supply itself is a valuable supply. Sir, taxable 650 lakhs. Thereafter, variable. How much? 10,200. 80% is repayable. So 1,200 minus 80%. Balance 20%. How much? 2040. Tax supply. Total tax supply equal to how much? 6,000. Sorry, 1,1550, 1,1162.50, 650, 2040. 5,402.5. Correct? Lakhs of rupees. Lakhs of rupees. On which at the rate of 18%. 9%. You said 9%. Okay, you tell me 18%, I will divide. Don't worry. 18% tell me. CGST 9% and SGST 9%. How much each one? Now tell me each one. 486.225 lakhs. 486.225 lakh. Is clear? That's it. Exam warranted question it is. If you refer here, 448623, 448623. But round off it is not applicable. You have to say that here 0.225. 0.225. You can round off lakhs. Is clear, my dear? Now please come back. Rule number 32, sub number 5. That much bigger rule number 32. There are effectively 6 sub rules are there. Rule number 32 has 6 sub rules. Now Buying and selling of second-hand goods. Rule number 32, sub number 5, applicable only to buying, selling of second-hand goods, where we have margin method. What do you mean by margin method? Sale value 100 rupees, purchase value 80 rupees, margin, and 20 rupees you pay the GST. Sir, other way around. My sale value 100 rupees, my purchase value 120 rupees. Okay. Then margin? No margin, sir. No margin, no margin, sir. Loss, sir. No margin, no GST. With the condition, a person who pays the GST under this margin method, rule number 325, not eligible to avail ITC. Not eligible to avail ITC. If you want to avail the ITC, regular scheme. Get my point? Now you tell me, in my case, food for thought to all my below students, online, offline. Online, my students, listen to me. Yes. Listen, Amma. Sundar purchased 5 cars from a manufacturer for 100 lakhs of rupees, sold to the customers at 80 lakh rupees. Sundar purchased the goods from manufacturer, 100 lakhs of worth of rupee cost of goods, namely vehicles, and sold for 80 lakhs. Sale price how much? 80 lakhs. Purchase price how much? 100 lakhs. Margin nil. Am I liable to pay GST under the rule number 32 sub number 5? The taxpayer says no margin, not liable to pay tax. Department says you have to pay the tax. Who is right? Department or taxpayer? Department is right. Why, sir? Huh? Huh? That is what the person who purchased the vehicle from manufacturer, which is not a second hand goods. This rule number 32 margin method applicable only for second hand goods. As a food for thought, we'll ask in the examination. Questions are there. So it's only for second hand goods. One more food for thought. Can I put numeric directly? You able to answer? Let us see how many of you, my semi-qualifieds, are answering. I am a challenge throwing in front of you. You are going to commit the mistake. Simple. Sale minus purchases. Margin, pay GST. No margin, no GST. Still I am telling you, challenging you, you commit the mistake. You not commit mistake? Let us take the challenge. Answer this question. Question number 31, reading as follows. Where they have been given somewhere they commit a mistake, or people connecting this, okay, this is also corrected. This where goes here connected, corrected. Coming correctly now. Let us see. Next, you read, brother. Don't worry. So I am asking the answer to you. I will read it for you. You have to answer. Okay. Question number 31. Pixel Pro Traders Private Limited, a registered GST dealer engaged in the business of second-hand goods, has supplied used DSL or camera to a customer in Hyderabad for a sale price of rupees 22,000. The camera was originally purchased for 14,000 from a registered dealer located in Pune, and on which GST 9,960 each was charged. GST rate on the camera 20%. Pixel Pro Traders charged IGST 20% on this interstate supply. Compare the GST liability in the following independent cases. If the input tax credit is availed, if the input tax credit not availed. Now I want the answer. Input tax credit not availed. Before that, I want to ask you, input tax credit availed. Input tax credit availed, what is not applicable? Rule number 32, sub number 5, not applicable. Clear? If input tax credit are eligible, then what is the net GST liability they are asking? Tell me, my sale value how much? Sale value 22,000. So I am going to pay the GST, interstate supply, IGST, correct? Yes, Raja. What rate? 28%. How much comes? 6160. Then less ITC availed, CGST and SGST. How much comes CGST just here? So 1960, 1960, 3920 is my net. NIA 22. Which one? Here, huh? Tell me how much? 2240 net liability. Any difficulty? Now I want to ask you, input tax is not availed, which is applicable? Rule number 32, sub number 5 apply, which is margin method. Now I want GST, how much to pay? Margin method only I am asking. Take the calculator and work out. Online students. Emma, I want net answer சொல்லுங்கயா. எனக்கு இதெல்லாம் வேணாம். No story, only result. How much? How much I'm liable to pay? GST under margin method. 2 same amount. No, I said no, incorrect. You will do incorrect. I said I challenged you. Sales minus purchase only. But you are coming incorrect answer. Incorrectly answering. Not giving the correct answer. Online students. Anybody can respond me, sir. You are a dynamic persons. Many of you starting online. I'm very happy to note how much determination required through attending online. Really hats off to my beloved friends who are attending through online. That too afternoon, lunch break. People are attending class. Determination. I'm very happy to note. Tell me the answer. This is not correct answer. Mm-hmm. 1,142. Same or any other answer? You are committing where mistake, sir. Fundamental foundation stone, you are not catching hold. No depreciation. You are not catching hold fundamental foundation stone in the GST law. Please try to understand and recapitulate all the time entire your profession tomorrow, even after qualify. GST paid on purchases if not qualify for ITC, it form part of cost of purchases. Get my point, sir? Under the margin method, you can't avail ITC. What's the cost of purchase? 14,000 plus GST, namely 20% thereon. 1960 CGST, 19 1960 SGST. Total equal to how much cost? 17,900 is the cost. My sale 22,000. Cost minus sales. Sales minus cost. Margin is there. 4,080. 4,080 is a margin. On which GST? What rate? 28% is equal to 1142. That is the answer. Look here. Here 2240 correct. If when it is form part of the cost GST, then cost increases. 1142 net liability. This is a foundation stone. Take into even whichever platform you are stand, GST on inward supply, if not qualify for ITC, form part of the cost. Not only we said from GST, your IND, AS, valuation of inventories, also same thing. Cost of market, whichever is less, cost should not include GST if qualify for ITC. If not qualify for ITC, cost includes GST. Get my points? As simple as this. With this, rule number 32, sub number 2, sub number 5, maximum extent completed, but further still is there. A mind-blowing point is there. So far untouched area, this area. I would like to refer this. Banker given the loan. The person who opted the loan defaulted to repay the loan. Banker will come forward to take the possession of the goods because the loan is given under hypothecation. When the goods are repossessed from defaulter by the banker, banker is going to sell that asset. This asset is a second-hand asset only. For the banker, obviously margin method only. For a banker, he knows sale price because he is selling it. What is the purchase price for the banker to get the margin? Banker can't avail ITC because banker has no input tax credit, tax invoice in his hands. So banker not possible to avail the ITC. In that case, margin method. Sales minus purchase. Margin. What is the purchase cost to the banker? The purchase cost to the defaulter borrower is the purchase cost for the banker after reducing 5% per quarter. Part of the quarter also be full quarter from the date of invoice till the date of repossession. Till the date, sorry to say, till the date of disposal, not repossession. See, till the date of, from the date of repossession till the date of disposal. Are you with me to understand? Repeating again. Loan is granted, Raja. 1st January 2024 loan is given. How much? 10 lakhs. The person purchased the asset. When purchased? First January 2024 he purchased. Loan is given, same day purchase asset. He default that loan, not paid. Therefore, banker repossess that goods. When repossessed? For example, 1st January 25, repossess the goods. The date of repossession is the date of acquisition for the bank. From the date of repossession, when he is going to sell the asset, today he sold it, 6th of August 25. Now, from 1st of January 25, from the date of repossession till the date of disposal, how many quarters? January, February, March, 1 quarter. April, May, June, 2 quarters, sir. July, August, September, even 1 day also 1 quarter. So 3 quarters. Per quarter how much? 5%. Cost to the purchaser, defaulting borrower, is the cost to the banker by reducing 5% from the date of repossession till the date of disposal. 15%, 3 quarters now. So that much you reduce, and balance you identify as cost of your purchases. That cost of purchases compare with the sale price. Sale price the cost price. Sale price more than the purchase price, the margin is there. And that margin pay the GST. If no margin, no GST. Here also I am bringing to notice a numeric problem. CA Institute itself not brought a numeric problem, any platform of them. I am bringing CMA Institute brought numeric problem. For the CMA Institute, you are the faculty is a resource person for the course material, as well as workbook available in the institute website. All India basis, not only referring by students but also faculties. Not only faculties, examiner tomorrow setting the paper required to refer this source. So now I am bringing a problem in this regard. Yes, is the problem. Rule number 32, sub number 5, margin method from the banker NBFC point of view. Here, this problem, I would like to request you read somebody. Yes, you read, Raja.
Cedar Finance Bank Limited, a registered financial institution, advanced a loan of 3.5 crores to Pioneer Equipment Private Limited on 10th September 2025, which was used to acquire specialized industrial machine. After Pioneer Equipment defaulted on repayment, a Cedar Finance Bank Limited repossessed the machine on 5th February 2026. The bank subsequently sold the machine on 15th May 2026. Determine the value of taxable supply of the machine in the hands of Cedar Finance Bank Limited under GST in these two independent scenarios. Case 1, machine sold for 3 crore 25 lakhs. Case 2, machine sold for 2 crore 95 lakhs. The applicable rate of IGST is 18%.
Good. This problem I will work out by taking input from you. Sir, this Cedar Finance Bank given the loan how much? 3.5 crore. And which was for acquiring purpose. And after that, the person defaulted the loan and repossessed the loan. When? Repossessed the machinery. 5th of February 2026. I given advanced date, Raja, because by the time the book is reading, people will be come to know the current live dates. Today it may be ahead. By the time it is a simple. That's why. Because to have a latest problem, latest scenario sense, I have given this. That's it. Somewhat overly looked into 26 instead of looking 25, but no problem. Now, in the given case, what happened? The repossessed the stock on 5th February and sold on 15th May 2026. Now I want cost of purchase to banker. Cost of purchase to the defaulter is the cost of purchase. How much? 3 crore 50 lakhs. Correct? This is the cost to the buyer, is the cost to the banker. But after reducing 5% per quarter from the date of repossession till the date of disposal. When the repossession takes place? 5th February, January, February, March, in that quarter. And this has been sold when? 15th May. So how many quarters? January, February, March, 1 quarter. April, May, June, 1 quarter. So May 15th they sold. Therefore 2 quarters. 5% reduction. Straight line, 5% reduction into 2 quarters equal to 10%. 10% is nothing but 35 lakhs. The cost of purchase will become how much? 3 crores 15, 3 crores 15 lakhs. 3 crores 15 lakhs. Correct? Is the cost of purchases to the banker. Now, what is the sale price? 3 crores 25 lakhs. So, 3 crores 25 lakhs, case 1, minus cost of purchase 3 crore 15 lakhs. Margin is there? How much margin? 10 lakhs is the margin, on which GST 18% is equal to 1,80,000 is the GST in the case 1. Case 2, 2,95,000, 2 crore 95 lakhs is the sale price. Purchase price 3 crore 15 lakhs. If so, margin nil. No margin, no GST. First case, second case, no GST. Question may going to come in the exam. Is clear? With this, rule number 32, sub number 5 completed. Rule number 32, sub number 6, valuation for voucher. On the face of it, I can say, in the case of voucher identified product or service, the value of voucher at the time of issue, time of supply, the value of voucher is the value of supply. No, sir. Redeemable any product or service, sir. Time of supply deferred to date of redemption. The value of voucher is almost 1 lakh, sir. But we have redeemed only 60,000, sir. Balance 40,000 vouchers in hand by the time it has been expired, sir. Time limit to exchange. Okay. Expired, no value. What is the value redeemed? 60 is the value of supply. As simple as this. Got the clarity? In the rule?
32, 5% is date of purchase.
That is what, Baba. I know you people should. I'm very happy your presence. Accept, brah. 100% admired. Your point well valid. Here, 5% per quarter from the date of purchase to the date of disposal. Banker purchased. Who purchased? Defaulter purchase. Defaulter purchase price is the purchase for the banker. Banker purchase means what? Repossess the stock by the banker is the bank purchase. Correct? Get my point. From whose point of view you are taxing? From banker, not from the defaulter point of view. So the date of purchase for the banker, date of acquisition means repossession. From that date to the date of disposal. Have been verified. There is no specific clarification in this regard. There is no specific clarification. Expert opinion, well acceptable, said by Supreme Court of India. This faculty, your faculty, has been gone through this with the compendiums where Pitamahas are then indirect taxes. They have interpreted this. From that source only I took this. Logically correct. Logical. If you take the purchase cost of the buyer from the date 5% reduction, huge amount of margin will come. banker will credit to pay the GST. That's why from the date of repossession is equal to date of acquisition. Okay. But does not mean that. There must be a logical point. When the banker is repossessed, is the date on which he is acquired. Is the meaning of it. Is clear? With this, rule number 32 series are completed. We have rule number 33. Very important. Pure agent expenditure. What is the rule number 33? Pure agent expenditure. Yeah. Pure agent is he who is neither enjoying the benefit out of the expenditure nor holding the title on the expenditure, but he incurring the expenditure on behalf of the recipient and reimbursing the same from the recipient. As I told you sometime before, you are a practicing CA. I am Bharatwaj Institute, your client. You call me, hey Mr. Bharatwaj, where are you? Now liable to pay TDS to the Department of Income Tax, which is 25 lakhs. Then I said, sir, Mr. Auditor, you're my friend, no? You both have studied together, na? So please trust me. You make the payment of TDS, 25 lakhs department. After 1 month, I will pay to you. You said, okay, da, because you are my friend. I am your friend. You being a practicing CA, remitted rupees 25 lakhs for Bharatwaj Institute income tax. Now you complete the balance sheet for the Bharatwaj also. Now you are raising the bill. Audit fees, financial balance sheet 1 lakh rupee. Add reimbursement of TDS paid on behalf of the Bharatwaj 25 lakhs. Totally 26 lakhs bill coming. What is the value of supply for you? Is the 26 lakhs value of supply or 1 lakh is the value of supply? Only 1 lakh, because the 25 lakhs is you acted as a pure agent, meaning thereby you are not holding the title on the expenditure nor you enjoying the benefit out of the expenditure. It is my expenditure, recipient expenditure, you have been delivered. Recipient expenditure, you have been discharged and reimbursing it on cost to cost basis without markup. Then it is a pure agent expenditure, should not be added in the value of supply. Is clear? Service supplier expenditure, then that is reimbursed cost to cost basis also from part of the value of supply. Example, sir, you are the auditor for Bharatwaj Institute. You came to Bharatwaj Institute for conducting the audit. During the audit, while coming to client place, you used your car. For which petrol you came here, and you did this service for 10 days. During the lunch break, you have taken the food from hotel. During 10 days, you have been called to your other clients over phone, telephone expenditure. This entire whose expenditure? Supplier expenditure. That is reimbursing on cost to cost basis from the Bharatwaj. It is not a pure agent expenditure. First of all, there must be a step. Expenditure belongs to whom? Recipient. Who it has been discharged? Supplier. Reimbursement on cost to cost actual basis, not form part of the value of supply. You get my point, sir? Very important, Raja. Sir, here aeroplane, some of the airport operator, Mumbai International Airport, Ocean, is the Mumbai International Airport. Beautiful. Like, more than 5-star hotel. Very good. If you got occasion, you go early there and stay for departure purpose. Do not go by rushing. Enjoy that particular place. Very beautiful. International airport, very outstanding if you have got occasion. Except Mumbai, I'm telling you. Chennai, not that much of a thing. Hyderabad is good again. Because I went for classes here and there, I used to sit there in the lobby for waiting airport air travel purpose. 2 hours, 3 hours before I will go. Before my departure time, 3 hours before I will go. I will sit there. Oh, so coolness. So all beautiful. That area, there are so many decorative items are there. There are so much of a what we call idols are there inside. You can able to see and time pass like anything. Now that who is operating, who owns this airport? Mumbai International Airport Limited is clear. Airport operator. When I am traveling from Mumbai to Chennai in SpiceJet aircraft, they are permitting me inside without any charge. Inside, cold water, hot water, very good maintained restrooms. Moreover, there various shops are available for buying and all. Thereafter, there is a prayer halls. You are whatever may be religious, for you prayer halls are there inside. Comfortably can pray and provide or have a worship. Not only that, those who are smokers, separate room, smoking rooms are there separately. So these are facilities providing. Are they charging from us? No. From where they get the fund to incur the expenditure? They supposed to charge from us. So air operators, airport operators facing difficulty to collect at the entry gate the passengers coming inside a passenger service fee, passenger user fee, difficult for them to collect. Therefore, Mumbai International Airport said, hey, SpiceJet, anyhow, that passenger booking the ticket for you to travel, you collecting the payment. While collecting the payment, you please collect our passenger service fee. There is passenger service fee, PSF. You please collect rupees 100 from passenger and remit to us. SpiceJet said, okay, I will do for you, sir. Whoever booking the ticket to travel from Mumbai International Airport in SpiceJet were collecting not only fees of aircraft, airfare, but also collecting passenger user fee. How much? 100. Sincerely, the 100 rupees remitting to airport operator. Now, in the hands of passenger aircraft service provider, passenger means the airport air travel operator, SpiceJet, charging airfare 10,000, passenger service fee 100 rupees, and 100 rupees remitting to airport operator. What is the value of supply in the hands of the SpiceJet? 10,000. 100 rupees is a pure agent. What he collected and what he paid one and same. Therefore, not addable in the value of supply in the hands of a SpiceJet, rupees 100. Now, 100 rupees chargeable or not for GST in the hands of air travel airport operator. Airport operator is liable to pay GST on 100 rupees inclusive basis. Inclusive basis, he has to pay GST. Now, SpiceJet was asking, airport operator, for landing and flying purpose, you are charging from us some charges. Airport operators charging fees from air travel operators. Now, we are providing you service. What service? On behalf of you, we are collecting passenger service fee. What we collect and pay to you honestly. Something you pay to me for that or not? Airport operator said, okay, I will pay to you 20 rupees. Each 100 rupees, 20 rupees. This 20 rupees is a consideration for the air travel operators. Get my point, sir? Then what is the point here as a pure agent means what is collected by air travel operators from passenger exactly paying to airport operators, then that is called what? A pure agent expenditure, not attract GST. But ultimately, that passenger service fee is taxable in the hands of airport operator as an inclusive basis. Got the clarity? This is what explanation given by CBIC in a circular which I brought to your notice here. Hold the mic, please.
Sir, suppose if there was no passenger, sir, the transaction is between airport operator and SpiceJet alone. Then the tax should be paid by SpiceJet or airport operator.
Which
Or
tax?
That 100 rupees.
No passenger only you said, na?
Okay, sir, leave that passenger. Some other amount is being transferred, sir.
Illa Raja. The point here is if no passenger, no fees collected. No fees credit, no consideration.
Understood, sir. Some other transaction, some other amount is being paid by SpiceJet to airport of
What is that nature? சும்மா கொடுத்துருக்காங்களே.
other infrastructure.
For air control room, traffic signaling services. For that paid the air travel operator to airport authorities.
SpiceJet has paid to airport
Mumbai
operator.
International Airport, yes.
That
FCM only, why RCM?
SpiceJet is registered only. SpiceJet is registered.
Supplier only, na?
Recipient.
Recipient is by whom here? SpiceJet. Supplier by whom? Airport
Operator.
Airport operator only applicable GST. Where is RCM, Raja? RCM means it should be specifically notified. Otherwise, by default, FCM. Is clear? Supplier is airport operator. Recipient is SpiceJet. FCM will apply. Even now, 100% fashion fee. Who will able to pay GST? Airport operator. Inclusive basis. FCM. Notified goods, notified services. Otherwise, no.
SpiceJet is collecting fee as well as the convenience fee. So we not consider as a competitive supply.
That is why he supply. Na? When I supply only, SpiceJet supply only. SpiceJet not supplying that. So compose is not possible.
So SpiceJet invoice only the ticket cost will be there.
How
he will be?
Passenger service fee.
It's invoice or separate
invoice.
In his invoice, it will be...
No. That is what I am telling you. See, you being a CA, raise the bill for Bharatwatch, adding fees 1 lakh rupee, add reimbursement. Where you adding in the same invoice? TDS paid how much? 25 lakhs. What is the value of supply? 1 lakh only. Invoice is there, no? So what? It is not so. It is not a composite supply. Is clear? Rule number 33 is completed. Rule number 34. Exchange rate. Rule number 34 is what? Exchange. In case of a supply of goods, CBIC exchange rate is the name of submission of bill of entry. In case of import, export of goods, submission of shipping bill, exchange of CBIC. Import of services, the exchange rate as per the gap, generally accepted accounting principle. Gap means what? Fair price, transfer price. Like that you have to consider exchange rate. Is clear as sir? Because all our import export denominated in foreign currency. We want to convert into Indian rupees. For conversion, rule number 34 says that for goods, CBIC exchange rate. For the service, gap. Generally accept accounting principle. It is not an accounting standard. It is open market value. As simple as that. Arm's length price. Is clear as sir? Finally, rule number 35. Rule number 35 refers gross value, where the value includes tax amount. If so, gross value multiplied by 100 divided by 100 plus GST, what we are getting is taxable value. As simple as that. Get my point, sir? Gross value when applied, now Mumbai International Airport, collected passenger service fee, rupees how much? 100. That is taxable in their hands. 100 rupees multiplied by 100 divided by 100 plus GST. Taxable value. On the taxable value, apply GST 18%, 18 by 100. You pay GST. Is clear as such? Got the clarity? With this explanation to the valuation chapter fully, thoroughly completed. What is there means some advanced concepts are there, important concepts there, circulars are there. That circular I will refer after having a 10 minutes break from now. With that, valuation will get over. We'll go input tax credit chapter today. Today we ensure that to complete the input tax credit chapter and leave. It will be 4 p.m. or 5 p.m. or 6 p.m. Input tax chapter should be complete today. Is the target. Is clear?
Data residential, SCE, standalone question expect பண்ணுவோம். For example, essay 8 சொல்லலாம். essay 8 எடுத்தா ரிப்போர்ட்டிங் பண்ணுவோம். ரெண்டுமே எடுத்து பண்ணா தரவாது. அப்பப்போ நீங்க நீங்க ஒரு கொஸ்டின் எடுப்பீங்க. இதெல்லாம் 8 எடுத்து ரிப்போர்ட்டிங் கேட்கறது. இருக்கும் அதான் நான் ஓ எஃப்ஆர் கேட்கும். எஃப்ஆர் பண்ணாம இதே சொன்னா முடியாது. அப்ப சில கஷ்டம் சீக்வன்ஸ் ஆன்சர் பேங்க்ல இருந்து இங்கிலீஷும் கேரளாவும் வச்சாங்க. இங்கிலீஷ் புக்ல வச்சு இங்கிலீஷ் புக்ல வச்சு இங்கிலீஷ் பேங்க் கேந்திரா ஃபார்முலா ஏதோ இங்கிலீஷ் நான் டைப் பண்ணி இது பரவாயில்ல வச்சு நூறு வயசு பார்க்கணும். நீங்க அது வந்து வச்சு பார்க்க அது வந்து அப்படி போயிட்டு இருக்கோம். தெரியாது. நீங்க படிக்கும்போது இல்ல நீங்க அந்த கிளாஸ் இருக்கும். பட் நீங்க அந்த கிளாஸ் எக்ஸ்பிளைன் பண்ணிட்டு அந்த கிளாஸ்க்கு காம்பனன்ட்லி இன்னொரு கிளாஸ் இருக்கும். அதை நீங்க மிஸ் பண்ணிருக்கீங்க. அந்த என்டையர் ஆன்சருக்கு அந்த காம்பனன்ட்லி கிளாஸ் தான் நீங்க போகணும். நான் ரெகுலர் கிளாஸ் எடுத்துக்கலாம். கொஞ்சம் ஏ பார்த்துட்டு ஏ ஃப்ரம் ஏ ஃப்ரம் ஷார்ட் கொஸ்டின் நீங்கள் எம்எல்ஏ போர்ட்ஃபோலியோ கேபிட்டல் வச்சுட்டீங்க. ஐஎஸ்எல் இன்டர்நேஷனல் மேனேஜ்மெண்ட் ஸ்டாப்ஸ் நல்லா ஆப்ஷனாலே தியரி இது ஃபாரின் ஆப்ஷன் நீ ஃபர்ஸ்ட் போ. இது லாஸ்ட் வந்து வாட் இஸ் இந்த வெயில் என்னுடைய கேப்டன் எல்லாம் விட்டு ஃபாரஸ்ட் பிடிச்சி கேட்கணும் இந்த மாதிரி இருக்குது ஜென்ரலாக ஃபாரஸ்ட் ஆப்ஷன் வந்து 2% போடலாம் ஆனால் எம்எல்ஏ ஃபாரஸ்ட் அப்ளிகேஷன் ஆனால் எம்எல்ஏ வந்து எம்எல்ஏ அது வந்து இல்ல ஆப்ஷன்ஸ் டெலிவரி பேக் 4 hours
Yes, my dear friends. Now referring to here, valuation advanced concepts. What are they? By way of circulars. Few only are there, but powerful. This circular, latest one can expect in the coming exam also. What is this circular speaks? This I will draft with a numeric example because it is very much relevant to our profession. Now listen here. Your X Limited, a registered person, Chennai. Being a registered person, you supply goods in the year 25-26, various occasions in the month of April 2025, August 2025, like that, supply the goods. That means goods sold to Y Limited. Assume the value of the goods supplied during that financial year, total value 100 lakhs. GST, IGST 28%, 28 lakh. All invoices are there. This Y Limited being a recipient is a registered person. This amount eligible for ITC. ITC abate. During that financial year, here what happened? There is a discount pattern also for them. Let us assume here a discount pattern. Yes. So what happened? They agreed to pay discount. They agreed for discount. Agreed. Let us say here the 30 lakhs discount, which agreed to provide, which is notice in the invoice. Goods has been supplied. The buyer honored the payment in time. Now discount has to provide. How much discount has to provide? 30 lakhs. Now, if so, for the discount, being a seller, this will issue a debit note, a credit note, a credit note. This fellow being a buyer for availing a discount, he will issue a debit note or credit note. Yeah, buyer will issue excellent debit note. Debit note what value? 30 lakh. Debit note who issued? A buyer, recipient issued. To whom? A supplier. Because in the books of I Limited, supplier X Limited is a creditor. To reverse debit note. So for debit note, GST, what rate? 28% IGST on 30 lakhs. On 30 lakhs, 28% is equal to how much? 8 lakh? 8.4 lakh is clear, sir. This is the discount often in the one financial year. Now, if debit note issued by the recipient for the recipient Y Limited is a liability, that means he availed the ITC. How much availed the ITC? 28 lakhs. Now, liability, output tax, because he availed the discount. How much? 8.4 lakhs output tax. Output tax. If he reduce that credit from his available credit, that means he is eligible and availed that is how much? 9.6 lakhs, correct? He reverse the credit, no? Buyer. Corresponding credit can be availed by supplier. Supplier received debit note from recipient, correct, sir? That means supplier can avail ITC. So, ITC availed by X amount, how much rupees? 8.4 lakh is clear. Now, buyer reverse the credit, corresponding credit, seller availed ITC due to discount nature. There is no mechanism in the network portal even till today where the supplier availed the ITC 8,40,000 for which the reversal of ITC taken place in the books of the recipient. Whether reversal or not, there is no mechanism to check. There is no mechanism to check. As a result, the given circular says, hey Mr. Chartered Accountant in practice, hey cost accountant in practice, we are trusting you. You please certify whether the recipient reverse the credit in the books of accounts or not. Verify the books of accounts, give certificate. This will certify that buyer Y Limited for so invoices avail the discount and he reversed ITC for the year 25-26, which is exceeding rupees 5 lakhs. Exceeding rupees 5 lakhs, 8.4 lakhs. I have verified, found all in order, certified, being a CA. And that certificate, hey Mr. Seller, you please get. The certificate you have to get from your buyer. Ask your buyer to get a certificate from CA and the certificate made available to you. Sir, why X Limit says, I got certificate, sir. Please keep with you. When you avail ITC, more than 5 lakh rupees in a financial year, more than 5 lakh rupees in a financial year, based on the debit note issued by the recipient, it is valid, acceptable, allowed as ITC. Department not going to ask any query tomorrow. If you have in your records a certificate issued by the CA by verifying the books of accounts of the recipient in this regard found true, that certificate you keep in your hand. Tomorrow, day after tomorrow, when the department or the auditor under section 65 department audit, under section 66 audit by special auditor, namely CMA, when they come for audit, you should show this as a proof. There won't be any further query raised. Get my point, sir? As simple as that. Sir, what about if the value of the credit not exceed rupees 5 lakhs in a financial year? In that case, hey Mr. Y Limited, you yourself can certify self-certification, and that self-certification made available to your supplier. Hey supplier, yes, X Limited, you retain that certificate issued by the Y Limited in his letterhead, reversal of ITC as a record. When come for tomorrow department for audit your books, you should show, yes sir, I obtained the certificate from Y who issues self-certificate in his letterhead, where the value in a financial year not exceed rupees 5 lakhs of credit. Is clear? As simple as that is the circular. Mechanism for providing evidence of compliance with section 15 subsection 3 clause B subclass 2 of the CGST Act for the existing or for excluding post sale discount from the taxable value. Got the clarity, my dear friends? Any difficulty? Subsidy from government should not form part of the value of supply. There is a encouragement of a cashless transaction, encouragement of debit card, credit card payments and all, BMAP and all, where the Ministry of Electronic and Information Technology, MIT, is giving some subsidy to the banks not to charge the charges where the customer using the debit card, credit card. Get my point, sir? Get my point? Banker will charge the charges for debit card, credit card swiping. Those charges should not charge if the value of transaction per transaction, let us say, not exceed rupees 2000. Small value transactions. We want to encourage the card payments. Then the banker says, how can we survive and success? Don't worry. The MIT, namely Ministry of Electronics and Information Technology, Government of India, one of the department, paying the subsidy to the bank. Banker taking subsidy and not charging much charges to the customers. The value of subsidy is formed part of the value of taxable subsidy in the hands of the bank? No. Reason? Government only issue the subsidy. Is clearer? This has been escalated further with the circular, the recent circular. Here, there are parties are involved like this. Look on the screen. MIT, Ministry of Information Technology and Information Technology, Ministry of Information Technology, MIT, paying the subsidy to HDFC Bank. Government subsidy to bank, not taxable. This HDFC Bank sharing with the co-bank, SBI Bank, the subsidy sharing it also be not taxable because subsidy only spreading. 100 rupees subsidy, retained 80 rupees, 20 rupees passing to SBI. SBI out of 20 rupees passing to the phone pay, where the transaction routed through phone pay, 5 rupees also be not taxable. Now 5 rupees is the phone pay sharing with Google Pay. Then phone pay, Google Pay, not banking sectors. They are the financial transaction involved platforms, internet platforms. The transaction between phone pay and Google Pay is taxable. 100 rupees subsidy, Raja. Retained 80 rupees, passing to 20, from 80 passing to 20, then after 20 passing to them is 5 rupees, retained 15 rupees. Out of the 5 rupees, phone pay sharing with them 2 rupees, retained 3 rupees. Now 100 rupees exempted, 20 rupees also exempted, 5 rupees also exempted. Now SBI phone pay sharing the Google Pay, how much? 2 rupees. This is taxable, which is not called as a subsidy of the government. The subsidy link ends at this level. Got the clarity? Step 1, step 2, step 3, that's all. Maximum flow. When you come to step 4, transaction between Google Pay, phone pay, between Google Pay and phone pay, not considered as a subsidy from government. Is clear as well? This point already covered. What is this particular provision? What this provision says? look here, no GST liability insurance companies, GST liability of the insurance company. What is this? Is how to understand? I will put in an example. Sir, look here. National Insurance Company giving the loss of stock of goods center. One Mr. Raj, he's purchased a very good new vehicle. Passenger vehicle. Value 10 lakh. And he is the owner of the vehicle. Owner of the vehicle. Raj paid to the insurance company premium rupees 2 lakh, covering bumper to bumper insurance. If any accident happened, wanted to have a replacement of new vehicle. Full amount should be insurance. How much value of how much value? 10 lakhs. 2 lakhs only premium paid. Last happened, 10 lakhs should be compensated. Is clear? Now, Mr. Raj taken this vehicle on road with 100 kilometers speed, hitted a particular tree. Now it has been like that it happened. This vehicle became like this, got damaged. It has some salvage value. Salvage value, let us say 3 lakh rupees. It has a salvage value. Insurance company offering, hey insurance Raj, you want full value to compensate or only net of the salvage value? Actually, we are ready to pay how much? 10 lakhs. Options are there. You retain this vehicle. This ownership is with you. Salvage is with you. Salvage with the insured person. Salvage with the insured. You keep with you. Balance only will pay. Is okay for you. Case 1. Salvage with Mr. Raj, insurer. If so, paid how much? 7 lakh. Now, ownership on the goods not transferred to insurance company. That's all. Transaction over. Insurance company not liable to pay any GST. Reason? Compensation only paid. They will not take anything. Case 2. Case 2 says salvage is with insurance company. That means I will take entire salvage, I will pay to full value. So compensation given how much? 10 lakhs. Since compensation, no GST in the hands of insured person. Now, salvage with whom? With the insurance company. What they will do? They will sell up it. When tomorrow salvage means damaged vehicle sold, damaged vehicle sold by insurance company, then it is called what? Supply. Insurance company liable to pay GST on the salvage value. Means salvage value means the value at which they are selling. 3 lakh rupees worth of the salvage value. They may be selling after doing some alteration at 5 lakh rupees. 5 lakhs is sale value. Is clear? This is what? This insurance. GST, no GST liability on the insurance company, GST liability. Salvage is with the insurer, then no GST. Salvage with the insurance company, then on account of selling that liability to pay GST. That's it, my dear. With this, valuation is completed. Now we are moving on to input tax credit. Input tax credit, ITC chapter. Very important chapter. There is no question paper printed so far without asking the questions from ITC. And there is no Finance Act has been passed through without undergoing the amendment from ITC. There is no Finance Act so far without having any amendments from the GST, from the ITC chapter. Even now, September 25 examination, also we have mind-blowing amendments in the ITC chapter. This I will take into my hand. I will explain in such a manner that, in a simplified manner. I am not going to refer elaboratively. In a simplified manner, I am going to present. Input tax credit chapter. ITC. Listen, my dear. How I am going to present this? Actually, we have the following sections: 16, subsection 1, 2, section 16, subsection 6 now. Subsection 5, subsection added newly now. You get my point? In the Finance Act 2024 with retrospective effect. Thereafter, we have section 17, subsection 1 to section 17, subsection 5. Thereafter, we have here section 18, subsection 1 to section 18, subsection 6 is a broad categories. This one of the cake. Thereafter, another cake. Thereafter, one more cake. Got the clarity? Now attacking on section 16, subsection 1 to section 16, subsection 6. Very, very simple. Here, input tax credit in a simplified manner. Listen to me. Who can avail ITC? A registered person, being a recipient, paying the GST under regular scheme, only eligible to claim ITC by satisfying certain conditions. What conditions one should here satisfy? First and foremost, section 16, subsection 2, clause A. Recipient, you must be hold tax invoice or a debit note issued by the supplier. Is there in your hand? Yes, sir. Section 16, subsection 2, class AA. After class A, class AA. Hey, Mr. Supplier, have you supplied the goods as such to recipient? Yes, sir. You please show that supply in your GSTR 1 return. made available that credit to the recipient through your GST1 return. When you, being a supplier, submitted the GST1 return by showing as your liability, is auto populating the recipient GST2B return. Section 16, subsection 2, class AA. என்ன சொல்றது? What it says, supplier, you should mention in your GST1 return the output tax liability. Mention, sir. Fine, very good. Hey, recipient, section 16, subsection 2, class B, which says that, have you received the goods? Have you received the services into your premises? Received, sir. Is one of the condition. If not received, it is not allowed. Meaning what? Tax invoice or debit note issued by the supplier received. When received? April month. Goods came June month. IT is allowed in the June month only. No, sir. The goods are coming from April month, sir. April month 200 units. May month 300 units. Finally, I got final lot in the month of July, sir. IT is allowed fully in the month of July when you receive the last lot. Very good. 16 to C. After that, hey, Mr. Recipient, you check in your GST2B return that credit is eligible for you, is appeared. I verified, sir. Open the network portal. I saw my GST2B. Sir, the credit is available, sir. As a eligible credit? Eligible credit only, sir. Not a blocked credit, sir. As per section 16, subsection 2, clause BA, there must be the credit available in the GST2B for availing the ITC. Not available now, you can't alter 2B, is static. We'll beat you if you take the credit more than the credit available in the GST2B. We will send to you notice under rule number 88D. Difference between 2B and 3B. We will take care. Therefore, what is eligible credit in the 2B alone you have to avail. The credit available, see first in the GST2B, that credit only you have to avail. Sir, I saw, sir, is available, sir. Then section 16, subsection 2, class BSS, avail the ITC. Avail the ITC. It is not sufficient. Hey, supplier, where are you? Look here. You supply the goods to so and so buyer? Yes, sir. Have you shown in the return GSTR1? Yes, sir. You have to pay the tax to department by filing GSTR 3B. Have you filed? Now I'm filing, sir. File first. Hey, recipient, if the supplier not pay the tax to department, we will catch hold you and we ask you to reverse the credit. By supplier paid the tax to department, file the return GST 3B. Section 16, subsection 2, class C, satisfied. Hey, Mr. Buyer, recipient, you want to avail ITC? You can avail. Provided you should file the return. For availing ITC, the recipient should file the return. Get my point, sir? Yes, sir, I filed the return, sir. GST 1 didn't filed it, GST 2B accepted it, GST 3B filed it. I can avail ITC? Yes, you can avail ITC. Get my point, sir? After that, seller says, "Oh, what happened to you, Mr. Buyer? You not paid the payment to me." Meaning what? If the buyer avail the ITC on credit basis, it is on his head responsibility of the recipient should make the payment to supplier within 180 days from the date of invoice. If not paid, hey recipient, you reverse the credit. Sir, in between I paid part payment only ITC allowed. Rule number 37. Rule number 37. Part payment paid, sir. Part payment allowed. Not section 37. Rule number 37. Part payment available, sir. Sir, fully not paid, sir. Fully should be reverse the credit. Sir, I reverse the credit, sir. After that, I got a payment. I paid to him after 250 days, sir. After expiry of 250 days, I paid, sir. Can I re-avail ITC? Yes, you can re-avail ITC. For re-availing ITC, time limit as specified under section 16, section 4 not applicable. Then what is the re-availment of ITC? What is the availment of ITC? Availment of ITC, there is no history of availment. Re-availment of ITC, there was a history of availment, subsequently reversed. Now again availing is called re-availment. For re-availment of ITC, time limit is lifetime. You get my point? Now please come back. Now the question arises here. If the supplier says, I have not paid the tax to department, buyer is honest guy, Mr. Muhammad Rafi, very honest guy, purchase the goods as a registered person, eligible to avail ITC, has tax invoice, paid the amount to supplier, proof of payment is there, full amount of tax also paid to supplier. I have received the goods also into my account. Everything is proper, Baba. Mr. Rafi, avail the ITC. But unfortunate, his seller who is not paid the tax to department after filing the GSTR 1 return but not filed the GSTR 3B. I avail the ITC on a bona fide basis because from my point I am very clear. I have tax invoice, I receive the goods. Get my point, sir? It is there in my GSTR 2B return. I avail the ITC, but unfortunate, I too make the payment to the supplier. Unfortunate, supplier not paid to department. Department send a notice to me. Hey, Mr. Rafi, you reverse the credit or pay the amount. So I purchased 100 lakhs worth of the goods, sir. 28% GST, sir. 28 lakh rupees, sir. You simply telling reverse the credit. How possible, sir? From my side, I am very clear, sir. Department, no. You see section 16, subsection 2, class C. If the supplier not pay the amount to department, you reverse the credit. There is a time limit given for supplier to make the payment if not paid in time. By 30th of September of the succeeding financial year, as per rule number 37 capital A. Rule number 37 capital A, time limit is given. To whom? A supplier to make the payment to department. If not paid in the given financial year, at least by succeeding financial year by 30th of September. Till that not paid, hey buyer, you reverse the credit by 30th November of the succeeding financial year. 30th September time limit in the next financial year for the seller. If not paid, by taking 2 months, October, November, by 30th November, the recipient should reverse the credit or pay the amount to department. Now, I got hurt. I won't reverse, I said. Department issue the notice. Pass the order. You have to pay the amount of 28 lakh rupees to department because you are not eligible for ITC. Because supplier not paid the amount to department. I hurt. I went to court. I went to Commission Appeals. Commission Appeals rejected me. Hey, but as per the section 16(2)(c), you have to reverse the credit. Why coming for appeal? Appeal rejected. Crying. Where I can go then? Amount of GST 28 lakh rupees. I have still to seek the justice from judiciary by filing a writ petition in the High Court. If not High Court, I can go to Supreme Court also by filing special leave petition. When the special leave petition comes into picture means only when doors fully closed for appeal. Appealable doors closed. Not possible for me to go for appeal. When I go for Commission Appeals rejected my appeal. not fit for a hearing. Can I go to high court? So the tribunal appeal, my case not fit for appeal in the lower court, it cannot be go to higher court. Then I have only one route, by filing writ petition in the office of High Court. I filed the case in the High Court, Calcutta High Court. I filed the case, writ petition. My name is Suncraft Energy Private Limited. My name is Suncraft Energy Private Limited. I filed the case in the High Court by way of writ in Calcutta High Court. My advocate represent the case, Millard. In the given case, there was a circular issued by the CBIC in the year 2018. Two circulars has been issued. First circular says, department first and foremost should conduct an inquiry whether the vendor who defaulted payment to tax department, is it absconded or is it existed? Absconded, conduct the inquiry, not possible to extract, then send the notice to buyer to reverse the credit. Second case, CBIC said, if the vendor is not absconded, if so, he is in business or close the business, is operating the business or close the business, conduct the inquiry. Sir, he is close the business, then ask for reversal of ITC from the buyer. He is in business, sir. Oh, conduct the inquiry whether that vendor is capable to pay the tax or not. Poor fellow became a liquidator, going to be liquidator, insolvency declared, or going to go for IRB, interim resolution processor, or it is good worthy person. Conduct the inquiry. After conducting inquiry, came to know that he is about to go for insolvency. Then ask the recipient to reverse the credit. This under inquiry only when conducted, came to know not possible to recover, then only recovery of that credit availed by the buyer takes place. Said by CBIC to department people in the circular press release, without conducting the inquiry by department, without giving the proof of conduct of this inquiry, directly send the notice, pass the order to my client to reverse the credit, unfair, Millard. Then Millard, judge said, where is the circular? Where is that press release with the date presented in front of the judiciary? And one more press release also given, Millard. That time, GSTR 2A represent the credit. Now we have 2B. 2A replaces as a 2B now. 2A is only a facilitation document for availing the ITC, not a sole document, said by CBIC in their press release. Now, the credit not reflected in the GSTR 2A is only facility, not a sole document, said by CBIC that time. By considering all this, please give the justice to my client. Such a proper, polite, logical manner with the evidences submitted in front of judiciary. Calcutta High Court said, hey department, have you conducted the inquiry? No, sir. Without conducting the inquiry, straight away asking the recipient to reverse the credit, unfair, which is your order null and void. Hey recipient, you are not required to reverse the credit, go. Judgment is given in favor of a Suncraft Energy Private Limited against department. Is eye lightening, it is a focus attention for the practice also. Tomorrow, A honest taxpayer who paid the tax to supplier, receive the goods and receive the tax invoice and made the payment. Just because of the supplier not pay the tax to department, you disqualify my credit without having proper inquiry for the vendor. Unfair or not? This is highly useful even for tomorrow when you qualify for a practice. Get my points? Case law, Sun Craft Energy Private Limited. Calcutta High Court in the year 2023 has been issued this judgment. Now please come back. Doubt? Hold the mic, Raja. Yes.
Sir, when the buyer is paying tax to the supplier, on the next month itself, you should have paid the should have filed the GST 1, no sir, in the sales. அப்போவே அந்த tax pay பண்ணிருக்கணும்ல sir.
GST 1 return filing by 11th of the following month.
Following month.
GST
sir.
3B going to be filed by payment 20th of the following month.
Following month, yes sir. But it's his duty to pay the tax, no sir.
Huh?
That's buyer's money. 100 lakhs. The taxable value 28%, 128 lakhs. So buyer has paid 128 lakhs to manufacturer. It is duty of the manufacturer to pay 28 lakhs to the GST department.
Correct, sir. Correct.
Not his money. So he has misappropriated the money and he has not paid.
Correct.
So for that it is a mistake of the.
That is what now I got angry. That is what I got angry. I went to High Court by filing a writ petition. Injustice, no, Raja. But this much of fighting required. See how much a trust undergone by the taxpayer. Went for appeal, rejected, again writ petition preparing, going for High Court. How much time taking process, how much...
Actually, it's a case of fraud there then.
It means, hey Mr. Buyer, next time you should not buy from such a fraudsters.
Case of fraud.
This is actually about fraud only, no? Then you call the test but not pay department is offense. Offense. Offense are punishable with imprisonment if the value is more than 100 lakhs. 1 crore. Minimum imprisonment 6 months is there. Maximum go up to 5 years. Therefore, horrible. Got the clarity? We will refer this and all in the assessment, adjudications, demand, they will refer. Actually, this is what the core area of final level. Of course, this is also important. Without this, what we can do there? So, here, two important points highlighted. One is the goods or service should have been received. Correct? Second one, the recipient should make the payment to supplier. These two certain practical cases relaxing, meaning deemed to have been received. Goods deemed to have been received, services deemed to have been received. Payment to supplier deemed to have been paid, means deeming provision. Actual payment not there, but still is deemed to be paid. When is deemed to be received goods or services means, simple point, look on the screen. In the given case, being a buyer from Tamil Nadu, Chennai, I place the order to supply the goods Telangana seller. At the same time, I requested as a bill to ship to model, you please ship the goods to my buyer, my job worker at Andhra Pradesh, bill to me. Here, who receives the goods on behalf of the buyer? Job worker. The date on which the job worker received the goods, when received into his premise 15th February, is deemed to have been received by the buyer. Then the buyer got tax invoice, goods received physically by the job worker on behalf of the buyer on 15th February. When can avail ITSC means the buyer can avail ITSC on 15th February, the date on which the goods received by the job worker. is deemed to have been issued by the buyer, ITC allowed. This point now further escalated. Before going for escalation of September 2025 examination question paper may go to come, 99.99% chances are there a amendment there in the supplementary issued by the CA Institute for September 25 CA final exam. I will take up now. If I am not wrong, those who are writing the examination in September, if you sit in the examination question paper along with that provision, you remember my words Rafi sir said in the class. That much of confidently I am telling you, it is going to appear in the exam. There in the examination question paper is the question paper printed. For September 25 question paper is printed na, there in the examination. I am telling you, take into granted. Paper leaking by me, take into granted. My students should get highest marks. They are not copying, understanding and going and write. Am I right or not? Not copy. It's not a copy. I am leaking the paper. CF final, September 2025, paper number 5, Indirect Tax Laws, CF final, question paper. This provision is there. That much of confidently I can say. If not there, don't blame me. Is a value addition? No. Because ma'am, that much confident. That's what I'm telling. What is that provision, sir? To know that provision, first of all, we should know a terminology called what? Ex works contract. Ex works contract. In the industry, X works contract is linked as X factory price. X factory price will be mentioned in the X works contract executed by the parties. For example, I am a manufacturer of original equipment. I am a manufacturer of original equipment. You are the brand name of Honda. Honda company, you are the logo owner, you are the owner. You are selling the motor vehicles. Honda company not manufacturing the motor vehicle, outsourcing to manufacture to export. You approach me, Mr. Regularly I am giving to you the work. Now also you manufacture latest model, all with the original spare parts, with good quality spare parts. You please manufacture the vehicles for us, 100 vehicles, and you supply on so and so date. Agreement. Seller said, sir, you want me to deliver the goods at your doorstep, or you can come and collect from my factory? You said, I will come to your place and collect the goods. You don't want to worry about dispatch of the goods. We will come to your place and collect. It's called X factory price. That price lesser than the showroom price. Therefore, the contract executed between you and me is X works contract. Means the price prevailing at the factory gate is to be paid by the buyer. Is clear? And from the factory gate to the place of the buyer, transportation, loading, unloading, insurance, and then who will bear it? Buyer will bear. This is what X was contract. Now, I am going to show that particular institute material for information purpose. iPad, Perik iPad, not able to catch hold my data. What further? Now, dealer, who is the dealer, my dear? Honda. Factory wala, X Limited, manufacturer. Contract execute what is? X works contract. Is clear as sir? Now, these vehicles manufactured by factory, at the factory, that X Limited approach the transporter transport arranging by manufacturer, loading the goods in the truck. Hey, Mr. GTA, please go and collect your freight from a dealer. He's only arrange the vehicle, the transport, because Honda Field cannot go and stand there now. So the transporter receive the goods from factory on behalf of a dealer, and who going to pay the freight to the GTA? Dealer, Honda. Is clear? The goods are handed over at the factory. When handed over? 1st August 2025. Goods are handed over from the factory to the place of the dealer. Takes some time. It reaches to dealer place on 1st October 2025, for example. Section 16, subsection 2, clause B says there must be receipt of the goods. There must be receipt of services. Now, goods when received 1st of October. Goods are handed over to the transporter by the factory wala, where the dealer has X works contract on 1st of August. Dealer says, I want to avail ITC in the month of August because the goods I received in the month of August itself, because my transporter only received the goods on behalf of me as if I have received. Is a deemed receipt of the goods. Field formation. No. The goods physically came to your place when? October month. That time only you can avail ITC. Get my point? Is a dispute. This has been addressed by the CBIC beautifully, saying that field formation. What type of contract it is? X was contract. Means the price factory get only. From the factory of the manufacturer till the rate of the time of the buyer place, all responsibility to carry is buyer responsibility. The goods are handed over the truck for transporting the goods to buyer place. Buyer is going to pay all transport charges from the factory to the buyer place. Therefore, the moment the goods hand over at the factory where X works contract is executed, then handing over the goods to the truck wala is deemed to be received by the buyer. As a result, hey Mr. Dealer, Honda fellow buyer, you need not want to wait till the goods physically come to your place. For availing ITC, you can avail it in the month of August, the date on which that factory will hand over the goods to the transporter itself, you deemed to be received. So ITC allowed in the month of August, not required to wait in the month of October. This is a question from our study amendment material available for CFI in September 25 exam. Definitely will come in the exam. Is there? Good question. Yes, Raja. Good bye. I am very happy to note. That like what you have to question such a manner that whatever question come in the exam, my students should answer. You question in the classroom itself. That is a real study. What is his point is, okay sir, August month, 10 cars are loaded. 10 cars loaded. It reaches to the buyer place, only 2 cars. 8 cars somebody thefted. IT availed in the month of August. But physically the goods is only 2 cars out of 10 cars. If the goods are stolen, destroyed during transit, which is abnormal nature, to that extent, input tax is not allowed. This particular dealer should reverse the credit or pay the amount to department, what he availed already. It's clear, sir. It's a black credit. So 10 cars, ITC availed 10 lakh rupees. 2 cars only received. 2 lakh rupees credit allowed. I availed how much? 10 lakhs. Now reverse 8 lakhs or pay the amount to department. So get my points. Any difficulty? As simple as this. So with this section 16, 2 only I completed. One more point is there. Deemed to have been paid. Recipient who should make the payment to supplier or not within dash number of days, 1 days from dash date of invoice. Excellent. Now deemed to have been paid. Head office supply the goods to branch office. Distinct persons. Value shown in the invoice 1 lakh rupee. GST 18%. 18,000 rupees credit availed by the buyer. Buyer na recipient. Who is recipient? Branch. Branch will make the payment to seller, namely head officer. Never going to pay forever. Never going to pay forever. Then branch avail the ITC. Not required to reverse the credit. For the branch, it is deemed to have been paid. For the branch, it is deemed to have been paid. Point number 1. Point number 2. Some advanced concept. You are aware of that. Section 15, subsection 2, class B. Supplies made by the recipient to supplier free of cost, for which the payment won't going to pay by the supplier. I said na, Ram Limited, KSA supplied 3 lakh worth of the goods, and it also passed to Ram Limited. Ram Limited will the ITC. Ram Limited going to pay the payment of 3 lakh rupees to him? No, deemed to have been paid. It is allowed, deemed to have been paid. Any difficulty? Section 16, subsection 2. Almost all I have covered, seems to be. Section 16, subsection 3. What is it is? Sir, section 16, subsection 3 talks about capital goods on which input tax credit. Capital goods on which input tax credit. Sir, input tax credit you want to claim on capital goods, ensure that GST paid on such capital goods you have not availed depreciation under the Income Tax Act 1961 under the section 32 as a block of assets. Sir, God promise I have not availed the ITC, but can I avail depreciation of the GST? Yes. Sir, God promise I have not availed the depreciation on the part of the GST. Can I avail ITC? Yes, any one possible. Reason, as you are aware of it, if you look here, I purchased the asset for 10 lakhs, capital asset. GST 20%, 28%, 2 lakh 80,000, 12 lakh 80,000 rupees. If I claim depreciation on section 32 on 12 lakh 80,000, no ITC. If I claim depreciation only on 10 lakhs, ITC allowed 2 lakh 80,000. Either one only option, not both for one asset. Asset to asset you can decide. Asset A, full claim depreciation. Asset B, ITC can avail. Can do it, but for one asset both are not allowed. Is clear? Coming to section 16, subsection 4. What is this is? Time limit to avail the ITC. Time limit to avail the ITC. Time limit to avail ITC. What is the time limit? In the year 25-26 financial year, an invoice or a debit note I received, I have not availed the ITC. Not avail, why not avail ITC? Not reflected in GST of 2B. What is there? GST 2B only can avail ITC, which is not reflected. Therefore, not availed. 25-26 over. In the next year, 26-27 financial year, it is appeared in the GST 2B of mine. Can I avail ITC? Time limit you have to refer. Section 16, subsection 4 says that for one given financial year, ITC not availed, in the subsequent financial year, by 30th November of the succeeding financial year or date of filing annual return GSTR 9 among the two, whichever is earlier, within which you can avail ITC. Assume I am going to file the return in the year for the year 2025-26 on 31st December 2026, 30th November 2026 or 31st December 2026, which is earlier, 30th November 26 earlier. Up to that I have time limit. After that, time barred claim, you cannot claim ITC. It is a provision you have to follow. Time limit is what, 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. Suppose if I file the return by 30th June 2026, that is earlier, not 30th November. So maximum time limit 30th of June only 2026 is to avail the ITC for the year 25-26 for availing ITC. This time limit not applicable for dash re-availment of ITC. Clear? Now got the clarity? You have energy to continue further? Yes? 10 minutes break with the move panlama? Okay. So we'll go up to 6 o'clock today by having 10 minutes break. Now at this point of time, 10 minutes break. Okay, sir? We'll go up to 6 p.m. to conclude the session, because if I complete today the ITC chapter, tomorrow we can have an exhaustive manner the concept of a registration, thereafter what you call as payment of tax, TDS, TCS. Now for me, okay. No problem. 10 minutes break is tonic for me, and your smile is a reward for me, is energy for me. You get my point, sir? Because you are going for the exam only 1 month only left over. Yeah, September. My target September. January is highly useful as a revision. Get my point, sir? But again, this type of opportunity of conducting the free classes may not be going to take place. No, Rafi sir never conducted for the past 25 years free class. Because of he associated with the Bharadwaj proposes, Rafi accepts. Then mutually we agree to have free class. But every attempt it won't come. Make use of this opportunity. Is clear, sir? See you after 10 minutes from now. Yeah. Continue. One more. Yes. CMA metal paper number 19 is we only contributed. Only me, resource person, study metal of institute. I did it for the past almost like 5-6 years. Before when the GST came, the material for the institute I only drafted with the syllabus for the institute. Inter and final. Now only for final. Yes, we start, my dear friends. Referring to now section 16 subsection 5, which is amnesty scheme, meaning what? For the first initial 17, 18, 18, 19, 19, 20, 2021, for the 4 years, due to not having awareness of availing the ITC as per section 16.4, not availing. For them, they have given a separate extension time limit. Further extend the time limit, that extended time limit also over now. This section 16.5, no question going to come in the exam of CA final, because amnesty, the past period, the date of time limit to extension also over. Those cases you should never going to consider for amendments. There is no history amnesty provisions considered in the amendment material by the Institute of CA. Therefore, wholly you can ignore section 16.5, which is no importance also now. You can implement that in the practice now, the past data. Coming to section 16, subsection 6, mind blowing, very important even today. What is that section 16? Subsection 6 refers as follows. Section 16, subsection 6. There is a lengthy provision. I will simplify with a numeric example. You will understand. Now, what happened, my dear? My name is Raj Limited. This Raj Limited, registered person, having the place of business Chennai. This person in the year 25-26 financial year, his registration cancelled. Why cancelled? When cancelled? Cancelled on today. Today what date? 6th August 2025 cancelled. Because for the past 6 months, continuously, he has not filed the return. March month, April, May, June, July. Even from the Feb onwards, he is not filed return. Feb 25, that financial year, Feb, thereafter, January, February, March, April, May, June, July. 6 months he is not filed the return continuously. Automatically cancellation take place. Then, as on the date of cancellation, that is on 6th August 2025, I have with me tax invoice, ITC not availed. One date of invoice, say 1st April 2023 invoice. GST 1.8 lakhs. Second invoice, date of invoice 1st April 2024, GST 2 lakh. This is what? Two invoices I have. As on the date of cancellation of registration, what are the invoices you have for which ITC not available? There are two invoices. These invoices, as on the date of cancellation of registration, not disqualified to claim ITC under section 16 subsection 4, or disqualified. You have to check. Not disqualified, sir. Which one? Second invoice. For the second invoice, time limit to avail the ITC under section 16, yes, under section 16 4, time limit is 30th November. ಇದು 25, yes, 25 24 25 financial year. Time limit is 30th November 25 is there. So date of cancellation is 6th August, and date time limit not over for second invoice. For the first invoice, time limit under section 16 4 is 30th November 2024. So that will not be over. Get my point? Always I will take 30th November because 31st December annual return due date is later, like that assume. So time limit to avail the ITC for the invoice dated 1st April 2023 is 30th November 2024. Time limit over. What are the invoices as on the date of cancellation of registration are eligible to avail ITC under section 16.4? Only one invoice. That invoice eligible for ITC but not avail ITC. Keep in your hand. Time limit for invoice 30th November 2025 is there. Now, Raj Limited approached, sir, department officer, please revoke my cancellation registration. I am out of station, outside the country. Now only I came. My intention not to pay is not so. I will pay, sir. Please grant me the same registration number, which is a lucky number for me. So please, sir. Within the time limit, he approached for department to revocation of cancellation. Department satisfied. Okay, mister. The returns what you not filed, you should file within 30 days from the date of revocation of cancellation. I am revoking your cancellation. Like that, cancellation has been cancelled, namely revocation of cancellation of registration on what date taken place, assume it taken place on, let us say, 30th September 2025. September 2025. Is clear, Baba? Now, here what happened further? He filed the return. When he filed the return, let us say, filled all returns filed on, let us say, 29 October 2025. From the date of revocation, within 30 days, he filed the return. Now, during the cancellation period from 6th August 2025 till the date revocation of cancellation, namely 30th September, during that mean period, he made purchases, some purchases, on which certain invoices are there, ITC obviously not aware. Those invoices, here is there. Invoice dated 1st September 2025, value 10 lakhs, GST 1.8 lakhs. Now, this invoice, GST ITC is not availed. As on the date of cancellation, GST ITC not availed, eligible to avail, time limit is there, but not availed. Here one invoice is there. How much here? Here is 2 lakhs. The 2 lakhs it is not availed. At the same time, 1,80,000 ITC is not availed. Is 1,80,000 for the duration of cancellation period. It is not availed. Together how much? 3,80,000 rupees. This 3,80,000, if I want to avail ITC, what is the time limit to avail the ITC? Section 16, section 6 says that due date to avail the ITC under section 16(4) for those invoices lying with you as in the date of cancellation registration is what date? 30th November 2025 or date of filing the annual return, whichever is earlier. Assume 30th November 2025 is earlier, that date, or 30 days from the date of revocation of cancellation of your registration. Means when cancellation of revocation taking place 30 September. 30 days means what? By 30th of October. 30th of October 2025 or 30th November 2025. Amount which is later, 30th November 2025. Till the time limit is there to avail the ITC, not only 2 lakh rupees but also 1,80,000. Totally 3,80,000. Time limit is 30th November 2025. How I got this date? As in the date of cancellation of registration, my invoices on which ITC not availed, not time barred. Due date is 30th November of the succeeding financial year or annual return date, whichever is earlier, which is 30th November 2025. Keep in your hand. That date compare with from the date of revocation of cancellation, 30 days. 30 days from the date of revocation of cancellation. That date or the date of 30th November, whichever is earlier. Sorry, whichever is later, not earlier, sorry, whichever is later. Here 30th November 2025 or 30th October 2025, which is later, 30th November 2025. Therefore, up to the 30th November 2025, time limit is to avail ITC, which is explained here in the given case. One is filed up to the 30th November or annual return, whichever is earlier. This is treated as A. Compare with where such return filed within 30 days from the date of revocation of cancellation. You get my point, sir? This is called B. Among whichever is later. Got the clarity? For the period from the cancellation of registration or effective date of cancellation, as the case may be, till the date of order of revocation of cancellation registration, where such return is filed within 30 days from the date of the order of revocation of cancellation of registration, that date or the date, the earlier one, whichever is later, up to the time limit is there. Aya, paranga. In the point number A, whichever is earlier. For section 16, subsection 4. This is section 16, subsection 6. Get my point, sir? That means section 16.6 is a supreme more than that of section 16.4. Section 16.6 will come with picture only when invoices IT is not availed as the date of cancellation of registration. Time limit under section 16.4 not expired. That invoices the time limit 30th November of section financial year or annual, whichever is earlier, that date. Compare with from the date of revocation of cancellation of registration within 30 days. That time period, 30 days time period. Within 30 days from the date of revocation of cancellation. This date or that whichever is later is the section 16.6 time permitted to avail the ITC. Is a peculiar case. Is clear, sir? With this, section 16 series completed. Now referring to section 17 series. My dear sir, section 17, I am not interested in reading the entire para by para. I will explain. Beautiful man will explain. You won't forget. You forget this or what? You won't forget. This I will send to you right now to your group. Export this page. Yes, should be effective, no. Rafi sir class means what? It should be an effective class. Once I complete the class, you should get ultimate benefit out of it. Yes, this point I am sending to your right now group. Huh? That is important. Is there? I am not going to remove that. If you want, I will send. I feel not important. If you feel important, definitely from your point of view, I will take into account. For me, you are important. You sit along with me. I will give the iPad. This and all I want, sir. Take it. This is what no. Ultimately, benefit goes to you people. This is what no. Why we are conducting a class morning to evening, sitting here, billing all our personal work, professional work. What for I'm taking classes, even for free of cost. Reason, my below students should get highest marks in IDT. If they tomorrow comes and say with a sweet box, sir, I qualified, sir, with highest marks in IDT, sir, that is really reward, lifetime reward. Get my point? Yes. Money, what? If you pay today, tomorrow I will spend. Gone. But the bondingness won't come. The bonding is always great. Now please come back, my dear. I sent this to a group. Further, whatever is there now is there in the material. As such, it will be there. I won't remove. You take that content if you like. Okay. Now coming to section 17. This also I am taking to my hand. 17 is very simple, damn easy. Where we have 5 subsections. Section 17(1). It says, hey Mr. Input services are capital goods. If you use for non business purpose. Inputs for non-business purpose, ITC allowed, Raja? No. No ITC. Non-business, no ITC. Take the mic, brother. 1 minute. No, loudly, speak. On. Switch on. This second button, just press just 1 second. It will trigger. It goes to power saving mode. Okay. Switch it on. Second one, not first one. The bottom layer. Yes. Now speak, sir. Going away. Going away. Doubt na is good. That you give me. Yeah. Now you can ask me, my dear sir. Doubt.
Is there any time limit to revocation?
Very good point. Time limit is there, sir. If my registration has been cancelled, I have to apply for revocation of cancellation. Comes under the section 30 category. Section 30, revocation of cancellation. Section 29, cancellation. Revocation of cancellation comes into picture. When I apply, time limit is there. Maximum is 180 days. From the date of cancellation, I have to apply. You get my point, sir? Is there in the material. That one right now I will show you as our the part 1 up to input as creator, sir. Part 1. Part 1 is what? Up to input as creator. Registration also is there. Part 1 registration is there. I will show you. See, revocation of cancellation. Once cancellation. Procedure for, look on the screen, Raja. Page number you want, Amma? Page number, it is what page? Maybe what is the page? It is not appearing here. This one, registration chapter. This slide, no? See, our uncle is there. GST officer. Yeah. Registration chapter only. The last registration chapter, last topic. Revocation of cancellation. Is my material or some other material? My material only, no? Then okay, fine. Now here, application for revocation of cancellation. Initial period how many days? 90 days from the date of cancellation of order. Is clear? Further it can be extended to 180 days, which is amendment. Look here. This can be further extended by the commissioner. Time limit for revocation of revocating cancellation, cancelled registration extended. See, 90 days time period is now extended to not exceeding 1 days. You get my points? 90 days, further not exceeding 180 days. That much of time is there to go for revocation of cancellation. Initial 90 days, further 180 days. Get my point, sir? They said here, not below the rank of additional commissioner or joint commissioner, as the case may be, for a further period not exceeding, 180 days, time period 90 days, further period not exceeding 180 days. That much of time limit is there to go for making application for revocation of cancellation of registration. Get my point, my dear friend? Shall we proceed no further? Now come back. Section 17, we are dealing with what? For non-business purpose, ITC not allowed. Section 17, 2. ITC allowed taxable supply purpose. Taxable supply includes zero rated supply. Is clear? Means export. Section 17, 3 talks about proportionate reversal of ITC if used for taxable plus exempt output. To the extent of exempt output, ITC is not allowed. There is a formula, rule number 42 for input goods, input services. Common credit, common ITC into exempted turnover for the tax period divided by total turnover for the tax period. The proportion of common credit attributed to exempt supply, ITC is not allowed. Now the point arises, how do we understand exempted turnover, which includes what, which excludes what? Refer rule number 42. That is a mind-blowing study. Same for rule number 43. Rule number 43, capital goods, common credit. GST on capital goods used commonly for taxable as well as exempt output supply. How to proportionate? Rule number 43. But rule number 42, 43, exempted turnover remains same, which I am presenting here in the material is available. Exempted turnover, which includes, which excludes. Look here. Listen to me. Only for formula purpose only, to bifurcate the common credit, not for any other purpose. Exempted turnover includes one, my supplies on which RCM apply. Means you liable to pay tax. I am not liable to pay tax, supplier. So in my supplier hands, it is exempted. That should include. Plus sale of securities. Sir, securities neither goods nor service. We know 1% on the sale value of securities will be considered as your exempt supply only for formula purpose, to bifurcate common credit. Is it clear? Second, third one, sale of land, sale of building. Sir, immovable property, sir, supply excludes, sir. I know. நான் சொன்னதை நீ கேளு. Said by GST Council, not by me. You get my point, sir? GST recommended. Exempted turnover includes sale of land, sale of building. That value how much? Shown in the stamp papers. For the stamp duty purpose, what is the value shown in that particular stamp paper? Land value, building value. That value is exempt supply. That entire value. Horrible. Plus nil rate of GST plus non-taxable supplies. Means sale of liquor meant for human consumption. These entire come under the exempted category. The following should not be included in exempt category for formula purpose, to bifurcate the common credit. 1. Schedule 3 transactions. Supply excludes, should be considered, except 2 things. 1. Sale of land and building. 2. Warehoused goods which is supplied before clearing for home consumption. That is considered, should include in exempted turnover. Thereafter, interest earned on deposit, loans, advances, though may be exempted, should not be considered under the exempt turnover unless the taxpayer is a banking company, taxpayer is a NBFC. Thereafter, central excise duty, value added tax, central sales tax, if anything is there, should not include in the tax, in the exempt turnover. Thereafter, export incentives, merchant export from India scheme, service export from India scheme, ROTDEP, remission of duties and taxes on exported products. Such export incentives are there, should not be considered as your exempted turnover. That's it. Sir, one point is triggering, sir. Supply of goods in a vessel from Indian customs station to a place outside India. This exemption was withdrawn, no exempt. So no question of exemption for that. Now you got the clarity. What it includes, what it excludes, you understand that? If I bring the problem able to answer a comprehensive exam problem is here, is as follows. Yes. Question number 42, page number 264. Yes. Somebody can read for me, na? You please read, brother. Yes. Take sportive manner, read as a friendly manner. Yes, we want to learn the subject. We are in the exam hall. This question is there. How to answer? That's spirit. Otherwise, when you study is getting hardness, bore adikide, something dryness, you assume and presume self-motivation. I'm a CA qualified, I'm a chartered accountant, in front of me client is sitting, I want to deliver. Now solely kudukunu, I want to explain him the provision. I'm a qualified CA. Take that presumption, assumption in your side and look the subject. As a CA, you look, not as a student. Then the automatic interest will come. You please read, brother.
Mrs. Prime Builders Limited, registered in Maharashtra, is engaged in the following activities for the financial year 2024-2025. Taxable supplies of construction service 3 crores. Exempt supply of rental income from residential property 50 lakhs. Sale of land, stamp duty value 80 lakhs. Sale of securities 2 crores. Outward supplies liable under reverse charge mechanism 20 lakhs. Mrs. Prime Builders Limited has availed the following input tax credit during the financial year 2024-25. Common inputs and input service 10 lakhs, 5 lakhs each consist of GST. Inputs and input service exclusively for taxable supplies 3 lakhs. Input and input service exclusively for exempt supplies 2 lakhs. Compute the eligible ITC allowed and ineligible ITC to be reversed under the section 17 to 73, read with Rule 42 of CGST Rule 2017, highlighting the treatment of exempt turnover including supplies under RCM, sale of land and sale of securities.
Now, common credit we know. How much common credit? 10 lakhs. Formula if you apply, common ITC multiplied by exempt turnover divided by total turnover. That much of credit ITC is not allowed. Is clear, sir? Now we want to know first what a exempt turnover. Look here. Is exempt turnover? No. Is a taxable supply. Rental income from residential property. Exempt. They said exempt supply. Therefore, exempt. So 50 lakhs is exempt. Is clear? Then Then I'll put 1 minute, Raja. Taxable supply, how much here? 3 crores. 3 crores taxable supply, young supply 50 lakhs. Further, sale of land, stamp duty value, how much? Entry 8 lakhs is what? Exempt supply includes. Securities 1% is equal to how much? 20 lakhs. Exempt supply 20 lakhs. Right? And 2 crores, Raja. 2 crores now? 2 lakhs. 2 lakhs. So 2 lakhs, not 20 lakhs. Very good. 2 lakhs. Outward supply liable under RCMA exempt. How much? 20 lakh. Total how much? 152 lakhs. 1 crore 52 lakhs. Taxable 3 crores. Total 4 crore 52 lakhs. Correct? This is the way in which we got this. Now common credit how much? 10 lakhs. Multiply by 152 lakhs divided by 452 lakhs. How much credit? Attributable exempt supply. 3 lakh 36,000. No, fully I want 3 lakhs. Ennappa 10 lakhs into 152 divided by 452 is equal to 3 lakh 36,000 283. 283. This much ITSA not allowed. The balance ITC is allowed. Then they're asking here, come here. Input service exclusive for tax pay. This entire 3 lakh ITC fully allowed. ITC fully allowed. Then 2 lakhs exclusive for, then it is fully not allowed. So ITC how much allowed in the given case means 10 lakhs minus 3 lakh 36,283. The balance amount 6 lakh 63,718 plus this 3 lakhs. Total credit allowed how much? 9 lakh 63,718. Is clear now? This is what net the compute the eligible ITC allowed to him, and reversal of ITC is equal to 3 lakh 36,283 is a reversal of ITC. Is clear as answer to this here. Okay. Here the 3 lakh 36,283 is reversal of ITC plus here you see total credit eligible ITC 6 lakhs 93,717. 6 lakhs 93 9 lakhs 63,718. Here also 9 lakhs 63,717. Here 718 7 only. Very good, perfectly correct. If it is a 8 marks 8 7 out of 7 but you have to have tabular form working notes. See step why I give the workbook with the solution means students should know the presentation pattern. You get my point, sir? So at this point of time I am concluding session. Continuation will be continued by tomorrow. Tomorrow is going to be complete section 7 subsection 4 and 7 5. 5 is a bracket credit. Just like that I will tell you like lollipop manner by showing the diagrams. Thereafter 18 section 18 special circumstances. If it completed maximum area of the input task is completed, then we proceed to section 19 to section 20 21. Like that we enter into 22. 22 is what? Registration chapter. Is clear as sir? Tomorrow we are going to complete registration followed by after that I will take up interest under GST section 50. Thereafter 51 TDS. Thereafter 52 TCS. I'm going to complete by tomorrow. After TCS, see, all other chapters not this much lengthy. Value of supply, place of supply, time of supply, lengthy. When you go to TDS, TCS, like that you can play. E-way bill, just within half an hour I'll complete the class for e-way bill by covering all aspects, examination point of view. Get my point, sir? So henceforth chapters are very lollipop manner will go. In what is going to be for us lengthy manner will take means when we enter into offenses and penalties. There section 122, section 122 to section 138. That is a lengthy one. That also we can have techniques to have this particular what we can call the provisions to handle, to recollect. Section 129, 130, 129 what? Detention, seizure, 130 confiscation, penalty provisions. Penalties are different values are there. And finally we going to be considered 138. 138 is compounding of offense. Little bit amended provisions are there. Not complication. Each and every provision I have the problems, including audit under GST law. I have numeric examples. Sir, audit numeric, yes, I will bring numerics to make you understand. Is clear as? See you by tomorrow sharply at 10 a.m. Thank you to one and all.